Friends, we are done with concept of introduction to GST. Now we'll start discussion about a fantastic topic known as the concept of supply. Supply is such a wonderful word and which has got a tremendous and wider meaning compared to the words called sale, purchase. See, prior to GST law, when we had the old laws like value added tax or service tax, in VAT, we used to use the word called purchase or sale of goods. And under service tax law, we have a word called providing of services or rendering of services. We have a word called providing of services or rendering of services. And under VAT law, we have a word called purchase or sale. Under VAT laws, we have purchase or sale. Under service tax law, we have a word called service provided or service rendered. But all these things have now been combined under one word called supply. And when we take it, we call it as inward supply, and we give it, we call it as outward supply. But we don't have a word called purchase and sale. And henceforth, in indirect tax laws, we are not going to talk the word called purchase and sale, and the only word we are going to talk is supply. Now, what is this word called exactly? Supply. And what we are trying to figure out in this concept called supply. Friends, this concept of supply is defined by Section 7 of CGST Act. Section 7 of CGST Act covers the concept of what is supply. And as I told you already, this supply has a very wider and a broad meaning which covers much more in this. Let me take a couple of examples and make you understand what exactly we are trying to talk and what is the wide scope of supply. Just imagine a situation one. Let's say there is a bakery known as Karachi Bakery which is located in Gujarat, and there is another Karachi Bakery located in Chennai. One Karachi Bakery located in Gujarat, another Karachi Bakery located in Chennai, and both these Karachi bakeries are owned by same person. One day what has happened? There was a shortage of biscuits in the Karachi Bakery Chennai branch. Chennai branch immediately contacted the Gujarat branch and asked them to transfer some biscuits from Gujarat godown to Chennai shop. Now friends, tell me something. Did actually we sell biscuits to somebody? Not really. The biscuits just moved from one godown to another godown, or in simple language from Gujarat shop to Chennai shop. Just there is a movement of goods and it's actually not being given to somebody. Otherwise, in simple language, we keep calling it as stock transfer. Stock transfer. Even though we call it as stock transfer, under this wonderful concept called supply, this word called stock transfer is even covered in the concept of supply. Now, a student will get immediately one doubt. What doubt will arise? Sir, Gujarat is owned by same person. Chennai branch is also owned by same person. When both are owned by same person, there is no consideration over there because actually the biscuits are not sold to any party and there is no consideration there. How will you pay GST, sir? And how is it called supply, sir? That doubt can come. But let me very frankly tell you, Section 7 supply does not just cover supplies made for consideration, but it also covers supplies made without consideration. So when biscuits are going from Karachi Bakery Gujarat to Karachi Bakery Chennai, I do accept that there is no consideration. But still the transaction is called as supply. So friends, now I am sure you understood the importance of this word called supply, which is very wide in meaning. And this concept of supply is defined by Section 7. So Section 7 is divided into 7.1, 7.1a, 7.2 and 7.3. Every subsection has its own scope. So we'll talk every subsection in detail. And as I told you, it's very important. So let's understand word by word and become perfect in that. So 7 is divided into 7.1, 7.1a, 7.2 and 7.3. So friends, first, now let's look into section 7.1. 7.1 is again further classified into 7.1a, 7.1b 71C. 71A, 71B and 71C. Now, let's get into the details of section 71A. As I told you some time back, this concept of supply covers within its scope the activities of sale and all also. So let me tell you, we get to hear a lot of words practically, something like sale, something like transfer, something like barter, something like exchange, something like rental, something like lease. So friends, let me ask you first interesting points. What is the difference between a sale and a transfer? We keep understanding sale means a transfer, transfer means a sale. We keep interchanging these words on and off. But let me tell you, what we always say is that sale is a case where there is a transfer of right along with transfer of title. But transfer word we use only when the right is given but not title is given. Only when the right is given but title is not given, we call it as a transfer. But when right is given and title is given, both are given, we call it as a sale. So that's called a sale, this is called a transfer. Now there we have two more interesting words, that is barter, other word is exchange. We always keep saying barter is exchange, exchange is barter, barter is exchange, exchange is barter. But let me tell you, there is a big difference between barter and exchange for a small logical reason that law has given two different words and there is a two different meanings for the word called barter and exchange. Imagine guys, just imagine you are having a phone. Let's say you have a phone called OnePlus 5. OnePlus 5 phone you are having and you go to a shop. Imagine you go to a cell phone shop and told that person, I want to buy an iPhone. Let's say he told the price of iPhone as 1 lakh rupees. For simplicity, let's assume the iPhone price is 1 lakh. When he told the price of 1 lakh, you ask that shopkeeper, I will give my old OnePlus phone and pay the balance amount. Can you please tell me what is the best price you will give for the iPhone? Imagine if the iPhone price is 1 lakh, he reduced 20,000 for your old phone and you paid balance 80,000. That transaction, we don't call it as a barter, we call it as an exchange. So prima facie, the difference between barter and exchange is a case where in barter, there is no monetary consideration involved. But in case of exchange, it involves certain amount of monetary consideration. So that's where law clearly told supply covers sale also, transfer also, barter also, exchange also. And we are not yet done. We still have some more words. So supply covers sale, transfer, barter, exchange. And it also covers an interesting word called license. License is something like giving rights to a person. One person gave a rights to another person to operate that. That is called a license. And we also have some words like rental or lease. We see a lot of times, for example, there is a big building. On the big building, newly constructed, they put up one board for rent or for lease. Now, rent or lease, the difference is that rent is generally for a shorter duration and lease is generally for a longer duration. And in lease, they get more rights compared to the case of rent. So friends, let's recall once again what I told you so far. Supply covers sale. Supply covers sale, transfer, barter, exchange, license, rental, lease. The last word given in the law is disposal. Disposal means what? We have given it as a scrap. So even if we give it as a scrap, still we call it as a supply. So going back, supply covers sale, transfer, barter, exchange, license, rental, lease or disposal. Now friends, if you look at the bare act and if you look at actually and exactly what this section 7.1a says, 7.1a says supply covers all forms of supply of goods or services or both, such as sale, transfer, barter, exchange, license, rental, lease or disposal, made or agreed to be made for a consideration by a person in the course or furtherance of business. So friends, section 7(1)(a), that is section 7 subsection 1 clause A, says that supply covers all forms of supply of goods or services or both, such as sale, transfer, barter, exchange, license, rental, lease or disposal, made or agreed to be made. So friends, what is the difference between made and agreed to be made? Made is a case where transaction is already done. Agreed to be made is a case where we have accepted, we have given our consent to do the transaction in the future. So made or agreed to be made for a consideration. So consideration can be monetary or non-monetary consideration. For a consideration by a person in the course or furtherance of business. So I repeat one more time, made or agreed to be made for a consideration by a person in the course or furtherance of business. Now big question is, what is difference between course of business, furtherance of business? Imagine, course of business is something like doing what you are doing. Furtherance of business is a case where doing something in order to expand your business. Let's take a small example. Let's say an idli selling guy. Let's say one person is selling idlis. That person is selling idlis. That's his course of business. Now imagine this person tries to get an innovative varieties of idlis. Something like masala idli or ghee idli, some spicy idli, butter idli, varieties of idlis he is trying to bring. Now that was not what he was doing till date, but now he's trying to do some innovation in this kind of business and trying to expand his business or increase in business. That we technically call it as furtherance of business. So now supply covers something which is made or agreed to be made for a consideration by a person in the course or furtherance of business. So I reiterate, section 7 subsection 1 clause A specifies that supply covers all forms of supply of goods or services or both, such as sale, transfer, barter, exchange, license, rental, lease or disposal, made or agreed to be made for a consideration by a person in the course or furtherance of business. That's the story of section 7(1) clause A. So friends, that is section 7 subsection 1 clause A. Moving forward, let me ask you one question, guys. Let's take and imagine a situation where, let's say, one student is there sitting idle at home, getting bored, relaxed, don't know what to do, totally confused. Now suddenly what has happened? He just started opening Amazon Prime, Netflix, YouTube, trying to search different videos so that he will relax for some time, watch some comedy videos and relax. Now what has happened? Incidentally, while going through YouTube, he ended up seeing one English web series which was very interesting, which they have shown only a sample piece, just a 2-minute shot was shown. But after that, to see the complete video, they need to make a payment. Only when you pay, you can see the complete video. Now, the person who is actually showing that English web series, who is actually situated outside India, and you are sitting in India, and you want to watch that video by making that payment, you want to see that English complete web series. Now, let me tell you, under this concept of supply, we have a concept called section 7 subsection 1 clause B, which clearly says import of services for a consideration, whether or not in the course or furtherance of business, it is still called as supply. That is why I gave you an example where you imported actually for your personal use. You didn't import your English web series for some business purpose nor for some professional purpose. You actually imported for your personal use, but still that transaction is called as supply. Now you might get it out. Say, being an individual, being a CS student, a normal man, I just paid some money to watch a video. If that also asks me to pay GST, how can I pay GST, sir? That question might come. But let me tell you, we have some concept of exemption list which talks about exemption given to certain individuals. That we'll talk slightly later. Now the primary purpose is to understand the concept whether a transaction is supply or not. So when you import some services for a consideration, whether it is for personal use or it is for business use, it is still called as supply. Now, take an example. Shiva Teja, a chartered accountant. I want to construct a beautiful office. Let's say I want to set up an office in India. I want to set up a wonderful office, and I got to know there is one person called Mr. Donald Trump. He is one top interior designer, and I want to set up an office in India. So I contacted Donald Trump of US and requested him if he could give some wonderful design to my office. Now tell me guys, what did I actually do? Import services. Did I pay a price? Definitely I'm going to pay. He's not going to give anything free to me. So it's like import of service for a consideration. For what use did I import? For my business use. And in my previous example, a CS student has downloaded a video for what purpose? Personal purpose. So whether it is personal use or it is business use, in both cases, we'll end up calling it as supply. But this concept of personal use or business use, both cases we call it as supply, will come only in case of import of services for a consideration, whether or not in the course or furtherance of business. This concept is dealt by section 7, subsection 1, clause B. So friends, as I told you some time back, we have section 7.1 clause A, 7.1 clause B, 7.1 clause C. We discussed what is 7.1 clause A. We discussed what is 7.1 clause B. We'll now move to 7.1 clause C. So friends, 7.1C deals with a very interesting issue. I actually call it as very interesting issue, and in fact one of my favorite concept, for a reason being 7.1C talks about certain transactions which are regarded as supply even though there is no consideration. Friends, sometime back we spoke in 7.1A that there is a consideration, in 7.1B that there is a consideration. Of course, in 7.1B an interesting point was for consideration whether or not in the course or furtherance of business. But 7.1C is altogether different, which says 7.1C talks about transactions regarded as supply even though there is no consideration. Yeah, what is this? So automatically you are emotionally start feeling different. See, lot of times when there is a consideration only, people hesitate to pay tax. Now we are talking about a case where there is no consideration but still pay tax. Some time back I gave an example. I repeat that one more time. Karachi Bakery, Gujarat and Karachi Bakery, Chennai, both are owned by same person, but there is a transfer of biscuits from Karachi Bakery, Gujarat to Karachi Bakery, Chennai. From here, the goods are moved to here. So technically, there is only a stock transfer, but we still call it as supply. Is there a consideration? No. It is just that from one shop owned by one person, another shop owned by same person, the just stock is moving, that's all. But we still call it as supply. So section 7.1C deals with certain transactions which are regarded as supply even though there is no consideration. No consideration, but still it is supply. But in that, we have only 4 points which we need to understand. In other words, there are only 4 transactions which are regarded as supply, even though there is no consideration, still called as supply. So let's figure out first point in that. Friends, take an example, guys. Imagine Shiva Teja has a cell phone. Shiva Teja has a cell phone which I purchased after GST has come. And when I purchased after GST has come, I gave my GST number to the shopkeeper. So I went to a shop called Mobile Store and I purchased one cell phone with my GST number. And obviously, I have given GST number, it clearly implies that I have taken GST input tax credit. Now tell me, friends, why did law give me input tax credit for my cell phone? For a small reason, because I am going to use that phone for my business purpose. So law told Shiva Teja, take input tax credit, no problem, enjoy, because you are going to use this phone for your business purpose. And I have taken input tax credit. I am happy. Government also happy. I am happy because I got my credit. Government also happy because government is happy that I am going to use my phone for my business purpose. Now what has happened? Imagine one charitable trust people has come to my office and told, Shiva sir, we'll be happy if you could donate something. I told, ठीक है यार, ले लो, कितना चाहिए? 1,000 rupees? Take it, I'll donate. They told me a statement, Shiva sir, we don't accept anything in monetary form, only in kind. Then I told, what do you want? Do you want some clothes or something? Then they replied, sir, we don't have a phone in our office. We'll be happy if you donate your phone to us. Hurry yaar, what's happening? They gave a question to me, or they asked me a question telling, sir, we'll feel happy if you donate your phone. Then I thought, with a great mindset, with too much of social service, I thought it's okay, let me donate. So I picked up my phone and donated to the charitable trust. Tell me, friends, did I actually sell? Answer is no. Did I actually transfer? Answer is no. What I've done is actually donated my phone. Donated, I've just donated. Donation is something what we give just like that without any return benefit. But law is telling that is also called as supply. In other words, we have one point in the law in section 7(1)(c) where the first point says permanent transfer or disposal of a business asset on which ITC is claimed. Permanent transfer or disposal of business asset on which ITC is claimed. Now what has happened? I had one phone on which I purchased and I have claimed input tax credit, and that phone I donated. So law is telling, even though you donate, please pay GST because it is a transfer of a business asset. So my phone is an asset on which I have taken input tax credit. So even though this phone is donated, still I have to pay GST. Now a student will get one doubt. Sir, imagine on that phone you have not taken credit. Is it supply, sir? My answer is of course no. Because law told what clearly? Permanent transfer or disposal of a business asset on which what is claimed? ITC is claimed. Only then we call it as supply. If on the phone I don't claim ITC and I donate that phone, it cannot be called as supply. So that's the story of the first point in section 7(1)(c). Yes, friends. So the first point in section 7(1)(c) is permanent transfer or disposal of a business asset on which ITC is claimed. Now moving forward, the second point. Second point says supplies between distinct or related persons in the course or furtherance of business. This point will take a lot of time to understand. Now when I say supplies between distinct or related persons in the course or furtherance of business, big question which will come is, who are these persons called distinct persons? Yeah, those sometime back I only told you very clearly, there is something called Karachi Bakery Gujarat, Karachi Bakery Chennai. Karachi Bakery Gujarat, Karachi Bakery Chennai, even though both are owned by same person, they are regarded as distinct persons. For GST purpose, only for GST purpose. See, real life world, we tell, Are, A is Sky, both are owned by same persons, both belong to same people. But let me tell you, under GST law only, they both are deemed to be separate persons. Because when they both are in different state, under GST law, we have a concept called state-wise registration. We don't take a registration on centralized basis, we take only on state-wise basis. So if you are operating in Gujarat, you have a registration in Gujarat. If you are operating in Chennai, you have a registration in Chennai. When you have registration in Gujarat state, when you have registration in Tamil Nadu state, these two are deemed to be distinct persons, even though they are owned by same person. Imagine, Shiva Teja only owns Karachi Bakery Gujarat, Karachi Bakery Chennai. But these two are deemed to be distinct persons, even though they both are owned by one person, only for GST purpose. So going back, supplies between distinct persons, or there is one more word called related persons. We'll elaborate that very soon. Supplies between distinct or related persons in the course or furtherance of business. In the course of further business means what? We already know. Course of business means we are doing something in the course of business. Furtherance of business is something like expanding the business. So I'll repeat one more time. Supplies between distinct or related persons in the course or furtherance of business. Now big question which comes is, who are these persons called related persons? In India, we always keep telling all Indians are brothers and sisters, everybody is our relatives. But for GST purpose, we don't say that everybody is relative. And we need to understand who are relatives. For individual, who is relative. For companies, who are relatives. So let's talk about who are these related persons. Let's take an examples for this. And how law has defined who are these persons called related persons. So the first point what they told is, such persons are officers or directors of one another's business. So imagine, I am director in your company, you are director in my company. In that case, our companies are called as related persons. And we are also called as related persons. So if the persons are officers or directors in one another's business, they are called as related persons. Second point, what law has told. Imagine, there's a company called A Limited, there's a company called B Limited. If A Limited is controlling B Limited, these two are called related persons. Or A Limited, B Limited, both are controlled by some company called C Limited. Still A and B are called as related persons. Other case, A Limited, B Limited, both companies together control another company. Still A and B are called as related persons. So in simple language, if A is controlling B or B is controlling A, they are called related persons. Or A and B are controlled by third persons, still A and B are called related persons. Or A and B are together controlling a third person, still A and B are called as related persons. Next interesting issue, there is a partnership firm known as PQR and Co, in which there are three partners, P, Q and R. So there is P, there is Q, there is R. P, Q and R are deemed to be related persons. So P, Q and R, these three are deemed to be related persons. Other interesting issue, a third person directly or indirectly holds or owns greater than or equal to 25% of voting stock or shares of both of them. Now what does that mean here? In simple language, let's take a company called X Limited. There's a company called X Limited. X Limited is holding shares in Y Limited, is holding shares in Z Limited. So X is holding in Y, X is holding in Z. Imagine now, X is holding 30% shares in Y Limited and X is holding 30% shares in Z Limited. So X Limited is holding 30% shares in Y Limited, 30% shares in Z Limited. Then we say that Y Limited and Z Limited, these two are regarded as related persons because a third person controls or holds 25% or more voting stock or shares of both of them. So X Limited is holding in Y Limited and it's also holding in Z Limited. So Y Limited, Z Limited are regarded as related persons. Another interesting issue, law also told person is called a related persons if one of them is a sole agent or a sole distributor. What does that mean? Example, let's say there is a company called Asian Paints. We all know Asian Paints, very popular for paints. Let's say one person called Mr. X. He is the whole and sole dealer. X is a whole and sole dealer for Asian Paints for entire northern region. So for entire North India, this person X is a sole dealer for Asian Paints. Actually, this person, Mr. X, he is not an agent of Asian Paints. He is only a dealer. So he is just procuring and sending off. That's all. He is not an agent. But still, he is only a sole distributor or a sole agent. When I say an agent, he is not working on a commission basis. He is actually procuring and giving it. Still, we call him as a related person. There is a small difference between working as an agent and working as a sole distributor. Agent is somebody who procure the goods and supply it and he'll get commission. Distributor is somebody who is buying and selling. Other words, there is inward supply and outward supply. In simple language, friend, agent makes commission. Distributor makes profit. Agent makes commission. Distributor makes profit. So law told even a sole distributor or a sole agent is also called as a related person. That's what law is told. So next interesting issue is a persons are called related persons if they are members of same family. Now what is family? Some of them have big families. Some of them have small families. Now big question is what is family? And in some definitions, sir, you will find the word called family means. Some places in some other act you find the word called family includes. And let me tell you, includes is very dangerous word because we have two types of definitions called inclusive and exact. Inclusive means what? They are covered. Something else also can be covered later. That means the list is only illustrative. But when I say family means exact, nothing more, nothing less. And in GST law, they define the family with the word called family means. In one section called section 249 defines what is family. And the good thing they have done is they divided the definition of family into two parts. Part 1. Who is covered in family? In part 1 is spouse and children. People always tell spouse means wife, or it's not just wife. For wife, husband is spouse. For husband, wife is spouse. So who is covered related person? Related person also covers members of the family. Members of the family is defined by 249. And in 249 family, there are two parts. What is part 1? Spouse and children. That is part 1. Other part, parents, grandparents, brothers, sister. So for an individual, imagine Shiva Teja, an individual, parents, grandparents, brothers, sisters, parents, grandparents, brothers, sister. These 4 are covered only if they are dependent on Shiva Teja. That too, how dependent? Wholly or mainly dependent. So I repeat one more time. Under definition of family, there are two parts or two categories. First category is spouse and children. Means spouse and children, whether they are dependent or not dependent, they are always relative. So Shiva Teja's son is always relative for Shiva Teja, whether is dependent or not on Shiva Teja. Other category, parents, grandparents, brothers, sister. These four are called as related persons if they are wholly or mainly dependent on the individual. We have got clarity, my dear friends. So one last time, who is family? One category is spouse and children. Second category is parents, grandparents, brothers and sisters. But parents, grandparents, brothers, sister are covered only if they are wholly or mainly dependent. So it's very important to keep this point in mind, because in exam, they'll question you on this point. They will ask, wife, not dependent, doing a job, is she relative? Answer is yes, because spouse and children are always relative. There is no word called dependent or not. The word dependent is there only in case of parents, grandparents, brothers, sister. That too if they are wholly or mainly dependent on the individual. That's the story of they are members of same family. One last point, we have one more last point, that is employer and employee. Employer and employee are also deemed to be related persons. So this is the story of who are called as related persons. So friends, going back to our discussion under section 7(1)(c), we are talking about transactions which are regarded as supply even though there is no consideration. In that, what was the first point? Permanent transfer or disposal of a business asset, example my cell phone, on which ITC is claimed. What is second point? Supplies between distinct or related persons in the course or furtherance of business. So these are the 2 points which talk about the concept of transaction regarded as supply even though there is no consideration. But we totally have 4 points to discuss. We have done so far 2 points. Let's now start discussion about our third point in the concept of section 7(1)(c). One last time we'll repeat. Section 7(1) is divided into 7(1)(a), 7(1)(b), 7(1)(c). We are done with 7(1)(a), 7(1)(b), 7(1)(c). We are talking in that we have 4 points totally. 1, 2, 3, 4 points we have. In that we are done with first and second point. Now let's move on to our third point.